This is the easiest liquidity trading strategy for your success. Now, join me as I show you the easiest setup that can boost your win rate over 90%. Now, are you aware that 70% or more people who trade liquidity actually trade it the wrong way? Now, the reason is because they do not understand how to read the right direction of the market. So whenever they open their charts, it's more like they're gambling. So right now, I'm going to explain the key components of liquidity and how you can easily spot it and know the right direction in which you're supposed to trade into. All right, what we call the draw on liquidity. Right, so towards the end of this video as well, I'm actually going to be revealing one of my top-notch secrets that gives me consistent profit on a daily basis, guys. You can verify this on my Telegram channel and see for yourself. Now, without further much ado, let's go straight into this video and show you what I'm talking about. Now, right here on the left spectrum, we have a redistribution model, meaning price is already in a downtrend and it's about to sell further. And right here on the right side of it, we have a reaccumulation model. Now, listen, guys, the first thing you want to know, or the first thing you want to position yourself for, is knowing how to draw your trading range. All right, your what? Your trading range. Your trading range. This is so important. Now, if you are in a downtrend, let's say you have a trend like this, and price wants to fall down. Look at this image so clearly. Your range is going to be the very bottom, your selling climax. This is going to be your range. Your range will start from here. So you can just come here to trading view, click on horizontal ray, put it on the tip here. That's your range. Then the last retracement before it falls. All right, so this is your range. From here to here, this is your range, guys. So simple. So simple. From this point, all right, the last point to this first retracement, just plot a line here and plot a line. That is your trading range. Now, this is what price usually does, or what price usually do when we're actually trading. Now, right here, let's plot our range here on this image. Let's plot our range. Now, take a good look at this. Now, you see how price moved from here to this point. We have our range. Now, immediately, price begins to fall down. This major sell, this initial sell, all right, is showing you, is giving you a clue that sellers just stepped into the market. Are you getting me now? That's what sellers just stepped into the market. So this is a sign of weakness. I don't mean the Bonner boy, no sign of weakness, but this right here is our first sign of weakness. First sign of weakness because price created a range and could not maintain that range. Am I making sense? Couldn't maintain that range. So invariably, that means there's a sign of weakness and sellers are dominating already. Now, what happens? Buyers see this opportunity. Smart traders, they see it and they start buying. They buy all the way here. They buy all the way to this point, right? They buy all the way to this point. So if we were to mark this as a Wyckoff schematic or a liquidity strategy, you would want to wait for price to come back with high volatility into this range again. Into this range. Are you getting me now? So the point at which price leaves the range and comes back into the range and closes below this very low. All right, this inducement level, this is going to be our inducement. then we now say we have a full-blown cycle of what? Distribution. But sometimes, like what happened yesterday when the Trump news came in, price did this. Price came here, right? Price came here and then had a wick. We just wicked through. Boom, like this. We wicked through. And then we went up. Now, this is no longer a distribution. This is now what? A reaccumulation or an accumulation. So a failed distribution, a failed redistribution is an accumulation, because if price was supposed to go lower, we would have gone lower. But since price was supposed to go lower and we couldn't, meaning there was a buyback, all right, it means there was a buyback. I'm going to give a full-blown tutorial on how to trade Wyckoff schematics sometime this week, probably maybe Friday. So stay tuned, click on the subscribe button and turn on your post notifications so you get updated as soon as I post these videos for you. All right, now it's very simple. So if we have a buyback here, then price begins to go up like this. All right, price begins to move up like this. So rule number one, plot your range. Ensure that you see a sign of weakness, which is this. All right, you see a sign of weakness, and then you see price creating a very huge sell move back into the range, and then breaking the last point that caused the major move, this low that caused this move, the old low that caused this high. You must see it break completely. You must see it break completely. If you don't see it break, then there is no distribution. Price could just easily wick from here and then begin to move up. So I'm going to show you another typical example of okay, let's do this now. Let's see this in our real chart. Then we'll come back here and talk about reaccumulation. So now let's talk about this now. Let's go to our real chart. I caught this trade from here. Let me show you guys. I caught this trade. I caught it real good. Caught it real good. Okay, where was the range here? This was our range. This was our range. Meaning from this point, from this low to this high here was our range, right? And I drew it. You could see how price broke down, creating a sign of weakness. This is a major sign of weakness. All right, it's a major sign of what? Weakness. Price came down, fell down massively, and then guess what happened next? It tried to what? Break out of this range. It actually did. If you go to your lower time frame, like 15 minutes, you're going to see it. It actually did. It broke out, but it could not break the low that created this high. Look at it. This was where I knew, okay, it's over for the bears. The bulls were already stepping in. It couldn't break the low that created this high. It couldn't break the low that created this high. And guess what price did? Price came here, cleared everyone out, and began to move. So immediately I saw this big move with fair value gaps. I told my guys, I said, look, man, this market is going to run. It's going to run massively. So just plot your volume indicator and see for yourself. You can use your VSA. I would recommend use your VSA. It shows your spread, volume spread for VSA. Just plot your volume spread and you see the heat map yourself. Do you see? See what I'm saying? Look at massive volume coming in already. Massive buy volumes, not even sales. Buy volumes coming in already. You can see this. Let's plot it on a 1 hour time frame. I love the 1 hour time frame a lot. See? Massive up to this point. So we bought We bought all the way to this point, and obviously price has TP'd here. Price has TP'd at that point. So from here now, we want to see what price is likely going to do. So if we are going to reverse, that would be another setup, right? To be another setup. So now we want to see a distribution from here. We want to see a major distribution ongoing from there. But if we go to our 4-hour time frame, we would see that we are what? Recovering. We're recovering from a major sell. Recovering from a major sell, and we're entering a buy program. So this is already a buy program. So I would want to see a reaccumulation happen here. I want to see a reaccumulation happen here. So that takes us into what a reaccumulation is. And we're going to do that right now, guys. So let's go. We're going to do that right now. So guys, look at this image very clearly. Look at this, pay attention, pay detailed attention, guys. Pay detailed attention. All right, so reaccumulation. How do we draw our range for a reaccumulation? We must first know our range. This is going to be the top of the peak of an impulsive move, which is this. Watch where I'm putting my own on. The peak of an impulsive move is here. And then the range low is going to be the first retracement. So in a bullish scenario, we want to see price break after here first to show us that there's what sign of strength. We don't want to see this. No. We want to see price break above it, meaning buyers were first active in the market to push price up. We want to see price break below there, and then we want to see price come back and close below the range again. All right. Now, after that, we want to see a change of character that sweeps all the lows. This is my favorite reaccumulation strategy in a bullish what? Trend. In a what? In a bullish trend. We want to see this happening. So, we want to see this. So, we want to see a change of character happening here, like right here. And then sweeping everybody out. And then we just take our entries from here like so. Now, the normal typical Wyckoff would actually just, plant and tell you those phases is important because this is our buying climax, automatic rally, sign of strength, retest, and then we have our spring right here. But I'm not going to tell you all that so it doesn't confuse you. So I'm teaching you in the very basic way that you could easily just understand what I'm doing. All right, you could easily just understand. All right, so this is it for reaccumulation. Now, if this is making sense to you, smash the like button, share this video, drop a comment, just write, thank you, MJ, or just drop anything positive on the comment section or any topic you would actually like me to talk about, and we'll dive in here and dissect it. This is MJ Crypto, one love, peace out to you guys. The mentorship is open for everyone, newbies, veterans, everybody that wants to learn how to trade. Come on board and learn how to trade. This is real money we're talking about here. One love, peace out to you guys. Love you all so much.